What we're seeing in the physical market isn't just industrial demand, and demand is a very big deal. You know, solar panels and electric cars, and power plants. They all need silver along with a lot of other critical minerals. But governments are getting into this now too. You know, Russia, China, and India are buying a lot of metals, including silver. The U.S. just announced that it was going to set up a critical mineral stockpile, and silver is included on that list too. So not only do you have, you know, Tesla and Google out there buying a lot of silver, but you've got the big governments of the world too. So the wind is absolutely at the back of silver right now, because you've got these big players who, you know, in the case of governments, they can literally print money. And in the case of a lot of these big corporations, they can print something better than money, which is new high-powered shares of common stock. So, you know, you've got a tremendous amount of potential demand out there on the physical side, and nowhere near enough physical metal to satisfy all the demand if everybody does what they say they're going to, you know? Google, for instance, just announced, or Alphabet announced their revised capital spending for the year ahead, and it was way up. It was already high, and now it's up to like $185 billion or something like that. They're trying to force down the paper price of silver and hope the physical price follows, so some of those big players get to step in and buy a lot of physical. That's par for the course for the commodities markets. You can never know what's going on behind the scenes. You can never trust a given trend because it can be reversed out in a heartbeat. So all you can really do is look at the fundamentals long term and position yourself so that when fundamentals finally dominate pricing, you're on the right side of that market, you know? And in the meantime, I mean, you know, I heard from a lot of friends who were kind of new to the silver market just lately when it tanked, because they were thinking, wow, okay, it's been going up for a year, so all I have to do is buy call options, and then it'll go up for another year and I'll make a fortune. And they were totally baffled when it just tanked, because it didn't occur to them that was a possibility. And it is a possibility. It happens in all bull markets, especially markets that are easily manipulated, like commodities. So we just have to live with that.
John Rubino reveals how big players manipulate silver prices while governments and tech giants buy physical metal. He explains the supply crisis, why mining stocks are poised to explode, and how stackers can profit from volatility. The decade-long thesis is paying off as physical markets finally dominate paper games. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
Silver is an amazing story, and it's, for maybe the past 3 or 4 months, has been basically the most exciting place to have any money invested. Now, the background of silver is great because it's got 2 stories, really. One is the monetary metal, and when gold goes up because currencies are being debased, silver comes along with it. The other, it's an industrial metal that we're kind of running out of. Each year, industry uses more silver than mines produce, and the silver that's left over, that's been in inventory all along, is shrinking. And there's some question about whether the paper exchanges are going to see enough physical demand that it taps them out and they have to default. And that's the really timely part of the story here. Although there's another timely part also, and that is that Chinese trading is shutting down for a week because of a holiday. And that just leaves the paper markets where all the manipulation happens operating. So we could see a huge amount of volatility in the next week or two, but that barely matters from the point of view of stackers, the people who have just been buying a little more silver each month or whatever, because the long-term story is so great. So my advice for the next few weeks would be to enjoy the volatility from a safe distance. Don't be too wrapped up in it, because the underlying fundamentals are great. Just stick with your silver positions. Don't let a big drop on any one of these days shake you out, because any big drop that happens in the next week or two will be reversed out once everything goes back to normal. So you got things like that out there in the market where governments are not price sensitive. They're buying because they need it as part of their national security policy. Companies that know they're going to need a lot of silver going forward, and they can't shut down the production lines because they run out. So they have to buy without a lot of price sensitivity. And these new technologies coming on board that use varying amounts of silver, but also can't just be shut down because silver isn't available or it's doing things that it shouldn't be doing. They all have to have silver. So if silver was just an industrial commodity, that part of the story would be good enough to make it a strong buy in the longer term. As Rick Rule said, sometimes the mining stocks will do better than the metals, and this might be one of those times. But if you're stacking, if you're buying a few silver coins a month, there's no reason to stop that, no matter what the price goes to in the short run, because the longer term story is phenomenal. Oh, and then there's Elon Musk announcing that he's going to put data centers in space. Presumably that's going to use some silver along with a lot of other important metals and minerals too. So, wherever you look, you've got something going on that's both unprecedented and really positive for silver. The miners, the gold and silver miners, then you've got a really interesting month ahead of you right now, because the price of gold and silver are way up, which means the miners, especially the high quality miners who control their costs, are looking at massive increases in earnings and cash flow at least in the coming earnings cycle, and probably much longer further out than that. So the earnings reports that these miners are going to release in late February and early March are going to be great. And assuming there's no big trauma going on in the market at the time, it ought to have a positive impact on the mining stocks. So if you're dollar cost averaging or using lowball bids or whatever to get into the mining stocks, you've probably got a good month or two at least in which they put up positive surprises over and over again. And the people who are paying attention to earnings momentum and cash flow levels and things like that are very possibly going to be piling into this market. So we got lots of volatility in the physical market and really good earnings reports in the mining sector to make this a really exciting month going forward. In China, they were increasing margin requirements, and I don't know the details beyond that, but that's the kind of trick that the Western metals exchanges use when the price of something is getting out of hand. They'll start raising the margin requirements, which makes it harder to gamble in the futures market. So you got fewer people gambling, which means fewer people standing for delivery, and that protects the physical inventories on the exchanges. And I don't know if they're doing it in China with the same objective, but they are doing it. And usually the impact of something like that is to lower the price of the target commodity, because you take away some of the potential demand and the price goes down. And that's happened in silver a bunch of times and in a lot of other commodities too. So it wouldn't be a huge surprise to see a lot of volatility while China is basically offline, or the Chinese physical markets at least are offline. I'm sorry that that especially new silver investors have to live through something like that if it comes, but it's just part of a bull market. Stuff happens, prices fluctuate, but where the prices end up depend on fundamentals. And in this case, silver's fundamentals are just great. So not to worry if there's volatility in the next couple of weeks. Just treat it as a buying opportunity. And again, you can turn it to your advantage if you have lowball bids in on mining stocks or something like that. They tank and you get them for 20 or 30% off today's prices, then they go back up. And that's a very common pattern, and it's one that could repeat this time very easily. It's easy to conceive of a 30% drop in the average silver miner and gold miner, followed by a nice big run back up to today's levels. So, if you've got the risk tolerance to be able to treat that like a buying opportunity, then it is an opportunity. So fewer and fewer people trust the big systems, which is part of why gold and silver are going up, because that's where people go when they don't trust the elites running monetary policy. They go back to the old kinds of money that governments can't create more of. So we're seeing that. So we're seeing a response to diminishing trust in every aspect of life. People are homeschooling their kids. They're looking into alternative medical treatments and
Yep, home remedies or Eastern or whatever, herbal.
And completely ignoring vaccines and other pharmaceuticals because they don't trust the guys who make those anymore, And then, so wherever you look, you see something like that. And now this Epstein thing is that's the icing on the cake. When these emails come out, I should kind of take this opportunity to apologize here because I did a post on Epstein and the shrinking trust horizon. And I said the biggest surprise to me was how dumb a lot of these people are. Their emails and their texts don't make them sound like they have multiple PhDs and they're running big sectors of the world, because they're the Larry Summers and Noam Chomskys of the world. They're, most people used to think, super geniuses, but they don't come off that way at all. Recognizing that there are some categories of people who maybe we didn't take seriously in the past, but who turned out to be right. And they are the preppers, the survivalists, and our grandparents. They had the right idea about a lot of this stuff. And they were, in a lot of ways, way more self-sufficient than most people are today. And self-sufficiency and resilience are the things that we ought to be cultivating. And so you do that. You do that on a lot of levels. One is if you've got the ability to have a garden where you can grow half your food, do that. It's spiritually really nurturing to do something like that. And it insulates you from crazy times when the food supply chain or whatever might be affected. Be able to defend yourself. Now is definitely the time to have one or two guns on hand, just because the world is getting crazier all the time, and you cannot trust the authorities to protect you in a lot of cases. And with your money, move as much of your financial assets away from government-dependent instruments like treasury bonds or something like that, something that depends on the dollar for its value. Get out of there, get into things that are real, like gold and silver and oil wells and farmland. Those are things that can't be created out of thin air. Become more of a part of your community. You don't want to be just that guy in a cabin with a bunch of guns because you're easy pickings then. But if you are part of a community where a bunch of people have your back and you've got their back, that is true resilience. And you want to cultivate that if it's possible. Join a church, get involved in the homeschooling of your kids and make friends with those parents. There's a lot of things you can do where you meet people who are very useful in a crisis. And you should be cultivating that kind of a life now. And it goes on and on. But, those are some pretty big things that our grandparents just innately understood. And the preppers and the survivalists kind of came to understand. And now I think it's time for the broadest possible part of the population to start picking up on this stuff and acting accordingly.